What's up guys, welcome back to the channel. In today's video, I will teach you how to find draw on liquidity. Draw on liquidity can be used to determine your daily bias, and this actually depends on the particular time frame you are looking at. Now, what is draw on liquidity? The market searches for external and internal range liquidity. I can determine where price is likely to draw to, then enter with the lower time frame to manage my risk, searching for that higher time frame target. Okay, now what you should keep in mind is that there are two things, or will I say there are two areas where price will always draw to. Firstly, price will always draw to external range liquidity, and external range liquidity is simply your old highs, your old lows. That is, your equal highs are included, your equal lows are included also. That is, your external range liquidity is basically maybe your buy side or your sell side liquidity areas, right? Now, price will also draw to internal range liquidity. Internal range liquidity could equally be your pricing efficiency, that is your imbalance, your fair value gaps, and it can actually be your order blocks. Okay, these are a kind of internal range liquidity. Price will either seek liquidity, that is taking highs or lows, or it goes to rebalance price, that is rebalancing price inefficiency, or it moves to mitigate order blocks. Now, one thing I want you to do is you have to always use the higher time frame to find your draw on liquidity. Then you can drop to your lower time frame for entry. Your higher time frame could be your 4 hours, 2 hours, or 1 hour, and your entry time frame could be your 15 minutes, 5 minutes, or 3 minutes time frame. So in this video, I'm just going to show you how to find draw on liquidity. That is the area where price is likely to go next. Now, starting from this area right here, where could be our draw on liquidity? Where could price move to? So we have this external range liquidity. Like we said, price will always move to external range liquidity, and we equally have this external range liquidity. So these are areas price could actually move to, right? Now, these are old highs. It's going to take price a long time to get to these particular highs, these highs we have right here. So what we're going to do is we're going to zoom into this particular area right here to see what we have, right? Let's zoom in into this internal range liquidity. Now, from this area, what I can actually see right now is that price sweeps this particular high. You see, price takes this high and it's at this particular area. So right now, we don't actually know our draw on liquidity, so we need to press price forward to see where price is likely going to move to. Now, what we see price do is that price takes this external range liquidity, and now this is the current high. Now this is the high that pushed price to this low. Now, what you need to note and understand is that we have this price inefficiency, which we can actually call price imbalance. Okay, we have this price imbalance right here. Another thing you should note is that we have an order block at this particular high. Now, where is my draw on liquidity? What price can actually do right now is it could come into this fair value gap and react to the downside. And the second thing price can actually do is it could come all the way into this order block, because what we note is that we have an order block right here. Even though the price action isn't too clean, we have another block at this area if you try to mark it out. So we have an order block right here. It will be clearer when you drop to a lower time frame. So this is what price is likely going to do next. Now, let's see how this actually plays out. Now, what you see right now is that price comes back into this fair value gap and it reacts to the downside. This fair value gap has been rebalanced. Just like what I said, these are areas where price is likely going to move to. So price breaks structure, reacts from this fair value gap, and we see a push to the downside. Now, price has continued to push to the downside. And another thing we can actually note is that we have a fair value gap right here. So this is actually another place price could react from. We have a fair value gap right here. We have another zone right here, which price could react from. But right now, we're not having any positive pullback in order to mark our external range liquidity. So let's press price forward a little bit. Now, price is actually reacting to the downside. We've seen a continuation to the downside. Now we have another larger fair value gap over here. I hope you can clearly see this. There's another fair value gap. Let's see if we're getting a pullback. Now you see price taps into this fair value gap. I hope you can clearly see the price action right here. Price taps into this fair value gap and it pushed to the downside. Now we're getting a retracement. Now this is our sell side liquidity. That is our external range liquidity. Remember, we have an external range liquidity at this high and at this particular low. So this is now our trading range, our external range liquidity, and these are areas price is likely to go to. Now if you actually measure here using your Fibonacci tool from the high to this current low, what you're going to notice is that price is at the discount level. Now our expectation is that price is going to come up all the way to this high. Okay, going to come up all the way to this high. Even though price has reacted from this fair value gap, we still have a little more gap into this area, and if you look closely, we still have an order block right here. Okay, so we have an order block. Now what is my expectation? My expectation is that price is going to come to this high. Price might not actually go straight into this high because this is our premium area. We're going to expect price to drop lower from this premium area, and apart from that, we have an order block which could be another area which we could enter from. Now based on draw on liquidity, what we know is that price usually goes back to areas of order block and areas of inefficiency to rebalance price, and it actually takes external range liquidity. Now we have an external range liquidity here, we have an external range liquidity, but from what you can see, we had a break of structure, that is price is pushing to the downside. Now expectation is that price is going to continue to the downside because this is a protected high right here. Okay, the high did its job by taking this low, so this is a protected high. Now expectation is that price is going to push to the downside. What you see is that price reacts from this fair value gap. Now what price can actually do is that it can come into this fair value gap, react a little, maybe push to the upside, mitigate this imbalance, react a little, then price can take this liquidity we have right here, that is this internal range liquidity, this internal high. Then we can see price reacts from this order block, and we're going to look to push the downside. If there is a fair value gap over here, price can actually react to it. Then we can look to trade to the downside before price is going to take this external range liquidity. This is what price can actually do. But in another case, if price fails to react like this, we can actually see price continue to the upside to take this external range liquidity. And if it takes this external range liquidity, that is, you're going to see a shift in order flow. Okay, so this is how price actually moves. It moves to areas of liquidity and areas of fair value gaps to rebalance price. Now what you see is that price pushed to the upside. You see this move to the upside. Let's continue to see how price go now. A continuation to the upside, aggressively to the upside. You see these candles are bullish candles with a little body. Now let's see how this actually plays out. Now what you see is that price is in this fair value gap right now. Price has tapped into this fair value gap but has not actually closed outside the fair value gap. What it did is it's tight above the high. Let's see. Now you see it reacts to the downside, so this pricing efficiency has been balanced. Now like I said, now that price has balanced this fair value gap, my expectation is that price is going to take this internal range liquidity more like an inducement area the way I trade, and after that I'm going to expect price to mitigate this order block right here. And now you see a push to the upside. Now can we actually get a fair value gap over here? And now you see we have a gap right here. So now what we do is you're going to mark this fair value gap, right? You're going to mark this fair value gap, and another thing you should note is that we have this internal range liquidity, this low right here. This is an internal range liquidity area. Now the expectation right now is that price is going to come back into this area. So this is how I see price when I look at the price chart. My expectation right now is that price is going to come back into this fair value gap we have over here. It's going to come back, rebalance price, then we could look to trade into this order block we have at this particular high. Now let's see how this actually plays out. Now price comes back into this particular area, fill in this fair value gap. You can see how price was not able to close outside the fair value gap, although price wicked lower to mitigate more like an order block at this area. Now we've seen that reaction to the upside, so let's continue to see how price reacts. Now price continues to move to the upside. Remember, we have a high right here. This is more like internal range liquidity, and we have this order block right here. Now price left another little fair value gap at this particular area, so this particular fair value gap could actually be filled when price must have mitigated this order block, now ready to push to the downside. So that's when this fair value gap could be filled. Now price hits the zone. You see price is in this order block, and remember what I said, if price doesn't actually respect this order block, we're going to have a shift in structure, that is price looking for higher prices. If price was able to respect this fair value gap, our expectation is that price is going to take this external range liquidity. So these are the two scenarios we're actually expecting right now. Now playing price forward, what can we see? Now price moves higher, that is fully mitigating this order block we have right here. You know, this is a bearish order block because we're expecting lower prices from this area to take out this external range liquidity and equally take this internal range liquidity. And you know, we have another internal range liquidity at this particular area. If I try to mark it, this is another internal range liquidity, that is internal lows. Okay, these are internal lows, and we equally have this fair value gap that needs to be filled, and that's it. So these are areas we expect price to draw to. Okay, areas we're expecting price to move to in order to take liquidity. Now you see we're getting that reaction to the downside. Now you see what we have over here. Price fills in this fair value gap. We have over here, we have a fair value gap that is price imbalance, and it has been balanced. Now you're going to expect a lower prices from this particular area, just like I've said. And now you see price moves away in continuation to the downside. And what can we actually see over here? Price creates a fair value gap, and now we have a push into that gap, and this push into this gap can actually fuel price to push lower in order to take out the sell side liquidity, that is external range liquidity, and this internal range liquidity we have at this particular area right now. And you see price moves away massively. You see that massive expansion to the downside. So this massive move to the downside is going to tell you, okay, this liquidity areas we have right here is actually going to be targeted. And now we can actually see price leave another fair value gap at this point. You see this price imbalance over here. Price leaves another imbalance, and we're actually going to expect price to come back, filling this fair value gap before we see a push to the downside. Now playing price forward, price continues lower, and it takes this internal range liquidity and possibly reacting from this order block, because we have this order block right here. This is more like another block inside this internal structure. So let's see how this goes. You see a little reaction from this order block we have right here. Price moved to the upside, filling this fair value gap, and you see price was not able to close outside the gap. Instead, it's closed inside this particular gap. It's not closing outside, that is above this imbalance we have over here. Let's see. And what can we actually see? See how price reacts massively to the downside from that gap. So that is why I said when we had this order block telling us that we're actually going to expect lower prices from the order block, we had this fair value gap which fueled the push to the downside in order to target these liquidity areas. This particular fair value gap we have right here, that is this price imbalance, price inefficiency, helped fuel this price massively to the downside, and price was able to take this particular low. Now at this point, if you look closely, you're going to notice that there is no price imbalance at this particular area. The price action right here is actually balanced, but if we look, we have this internal range liquidity, that is this internal high. So at this particular point, what we're going to expect is actually two things. What are we going to expect? Firstly, my expectation is that I'm going to have a deeper pullback that is going to take this high, and secondly, if we don't get this pullback that takes this high before the continuation to the downside, then what we're going to see is we're going to have a take of this low immediately that is going to take this external range liquidity. So these are the two scenarios. You're going to have a pullback that is going to take this particular high before the continuation to the downside, or you're going to have a push to the downside in continuation. So firstly, why am I even expecting a pullback? Why am I not expecting price to continue to the downside to take this external range liquidity? Why I'm actually looking at price to pull back is because we have a break of structure right now. Okay, you see we have this break of structure, and I'm going to expect price to come back maybe to this area to mitigate maybe an order block, okay, before the continuation. This is more like price respecting the internal structure. Okay, so let's see how this actually plays out. Now you see price moves to the upside, mitigates something at this area, and price actually left a very big fair value gap right here which you need to be filled. Price has taken this high right here. This is internal range liquidity. Price takes the high, creates this fair value gap. Now where is our new drawn on liquidity? We're going to expect price to draw back into this range, or possibly take this particular low we have right here, because a zone has been mitigated at this particular high. Now playing price forward, you see price comes into this fair value gap but has not actually closed outside. Now we're going to expect a reaction from that. Now we're going to expect, you see, we're getting a very good reaction from this fair value gap. And what did price actually do? Price reacted from this fair value gap, moved to the upside to rebalance this other fair value gap we have right here, because you see we have another gap over here. So price rebalanced it. Still going to expect maybe a little reaction from this fair value gap, because we equally have a high right here. This is our current high, so price could actually still react from this fair value gap to target this particular high. So let's see how this goes. You see price is still into the gap, and now you see price didn't actually close outside the gap. Instead, it has been closing inside this particular gap. So this is how you know where price is likely going to move to. And now you see what I'm saying, price reacts from this fair value gap after it has filled this inefficiency we have right now. You see this reaction to the upside, but price was not able to take this particular high. Here are my draw on liquidity. These are two areas price is going to move to. Price is going to move into this fair value gap we have right here, and possibly to take this internal range liquidity, that is this low right here. This is just like a minor low we have right here. So these are two areas price is going to draw to from this particular high it is currently. Now playing price forward, and now you see price is dropping lower right now, and you see a reaction from this fair value gap. Price taps in a reaction. I hope you can see that. And now boom, price pushed to the downside, takes this low we have right here. And where is our next target? Let's see if we can get a fair value gap. If price can leave a fair value gap right here, we're going to look to take this external range liquidity. Now we have this fair value gap right here. You see that gap? Now the way I see the market, I'm going to expect price maybe come into this area, into this gap, to target this short-term low and to target this particular low we equally have right here. So this is my expectation right now. And now what can you see? Price returns back into the fair value gap, even though it's closed outside the gap, but now we've seen a reaction to the downside, and you see price starts to push to the downside after it returns back to filling this fair value gap. You see we have another gap right here. Now after price creates this gap, you see a pullback that returns into this gap. So we're going to expect price to take this low and this external range liquidity, because this is our external range liquidity, that is our sell side liquidity. So this is what I expect price to do from that particular area right now. So let's see how this actually plays out. Now you see price was able to take this low we have right here. Now what you should note is that we equally have this high being printed right here. What we're going to expect is when price takes this external range liquidity, price is going to draw back into this area in order to take this particular high, and if it's possible it can get to this particular high we have at this particular area. Now you see price moves lower and it takes this external range liquidity, and what you can actually see from here is that we have this particular high right here. So this is more like equal highs, and if I try to mark this properly, you see we have this as another equal high. These are areas price can actually move to in order to take liquidity. Now we have this fair value gap right here, and this fair value gap is very close to the area where price took external range liquidity, so I don't expect much from this fair value gap. So this is why I don't usually trade from a fair value gap. If I want to take my trades, I focus on trading from order blocks, because order blocks gives me a very good result, because from what you can see here, this order block we have over here was able to hold price, and you see this order block has caused this move to the downside that takes this external range liquidity. So this is why I mostly trade from an order block. So I don't know for you, I don't advise you trade from a fair value gap except you are experienced just like ICT. Now let's continue to press this forward. I don't want this video to take a lot of time, but this kind of explanation usually take a lot of time. Okay, so let's see, let's do it quickly. Let's press price forward more quickly so we can round up this lesson. Now what you can see is that price actually comes back into this fair value gap, but it didn't take this particular high. Now we see a continuation to the downside. Now what you can actually see is that we have another gap right here, right? We have this particular gap right here. So let's expect price to fill in this fair value gap. We equally have this external range liquidity. So this is our current external range liquidity where we're expecting price to take, but before that we want to see price come back, fill in this fair value gap, maybe a little reaction, take this particular high, maybe a little reaction before we expecting price to take these equal highs we have right here. So this is our expectation from this particular price action we have at this area. So playing price forward. Now what you can see, I place price forward too fast, so we can look to end this particular lesson. So what we see from this area is that price didn't actually respect this fair value gap, instead it's blast through it. But you can see we have an overlap of fair value gap, that's an imbalance right here. We have this overlap, price moves to the upside, takes this particular high we have right here. And what else do we see? We have this fair value gap over here which pushed price higher to take these equal highs we have at this particular area. So let's press price forward and see what we have. Now you see we have a push to the downside. Now this is our current high and this is our external range liquidity. Now the expectation is that price is going to move from this high in order to target this particular low right here, because what you can see is that price break structure, it has come to mitigate maybe a kind of a zone, maybe a range created supply zone at this particular area, and there is no fair value gap at these areas except the one we have right here. So what price can actually do is it could come to this fair value gap, react to take this particular high, or it could come to this fair value gap, react a little bit. After this little reaction, it can go lower to take this external range liquidity. So this is the two scenarios, two things I'm expecting price to do at this particular area. Okay, so let's see how this is going to work out. Let's see what price is going to print. Now you see price returns into this fair value gap we have right here, and we equally have another little fair value gap at this point. Now let's see what happens over here. Now price reacts from this gap, a push to the upside, and it didn't actually respect this particular gap. Instead we have another gap inside this area. Hope you can see that. So let's see. Now price retraces to the downside without respecting this other gap equally, and you see it's a massive push to the downside. Now where's the target? This external range liquidity. This is where we're going to expect price to target, right? This is our current target right now, this external range liquidity. Now playing price forward, so I think this is the current price action we have right now, because from what you can see, this is what we have right now. This is the current price action. This is where price is currently at, because I'm recording this video on the 20th of October, Friday. So yeah, so this is how you can actually find your draw on liquidity, and I hope this video was helpful. If this video was helpful, kindly smash the like button, equally consider subscribing to this channel. So thanks very much and see you in the next video.